Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I am audible to you. Let me display the PowerPoint presentation. Good day, Daisy. Thanks for confirming the audibility. Asian session live market analysis for this week, 21 to 25 of May. And we are on 21st for the week beginning between 5 and 5:45 GMT. I'll just review the market before you and try to derive what could be the possible moves during this particular week. So for this, we try to use three different components, namely the derived forecast, which is one of the components, namely the algorithm-based statistically derived forecast. I will try to give it on a daily basis in iknowindices.com/blog and also during the Asian session live market analysis on Monday and Thursday. And also we try to do the market reading. So in order to read the market reading, in order to find out what could be the possible moves in the market, we note down the high and the low set between 2:30 and 3:30 GMT. They may set the low around 2:30 and the high around 3:30, or the high around 2:30 and low around 3:30, whatever it might be. After 3:30, we try to note down the initial lows and the highs in 4 majors and 2 commodity pairs and try to find out whether they are breaching the high and going above or breaching the low and going below, in order to identify the type of moves, what they are trying to do it. Once we know a particular type of move, we know that they do it in sequence, so we derive the next type of move from there. This is how we try to do the market reading. And in order to understand the 24 hours market cycle, we try to use the GMT time frame, which is also 24 hours time frame. Then, using the forecast as well as the market reading, we might derive that they could rise euro or drop euro and things like that. But still, there are so many influencing factors, and even some ministers sneeze, the market might correct or rise and things like that. So there are a lot of uncertainties prevailing in that market. And also, from time to time, they can create the rumors and try to make big moves, and they are unscheduled triggers for the market. So in order to avoid any sort of drawdown in our positions, either we do a sell and buy trade or a buy and sell trade, there could be a sudden drawdown when they make knee-jerk reactions in the market. So in order to limit the risk, so we try to follow the market reading and try to enter into the market when the market is, or the particular currency is near the low, a buy position, or near the high, a sell position. And always we try to buy or sell during the quick moves in the market. So quick moves or false move, they quickly drop as if the world is going to end, and then stop cutting the new low for about 30 minutes, start gaining the levels. So on Friday, they just made, during US session start, a drop in the case of euro and GBP, and it appeared as if there is going to be a selling pressure on Friday, but they stopped it because they had done it during the session start time. When they do it during the session start time, always understand that during the session end, they want to make the opposite move. So that is what they had done it, and we read the market accordingly. During a quick downward stop, and we try to buy and still keep the hedging order to limit the risk, because sometimes they may extend their move on the downside as well. Then once the position makes profit and the hedging is not filled, we try to keep stop at entry and trail the stop in a profit-making position and try to maximize the profit during the rise. So all along last week, they have been talking about European crisis and things like that, and still they made a rise on Friday. And it might be considered as a pullback, or it be considered as a short covering and things like that. There can be so many attributes. and there is the end of the week. Then the new week. So in the new week, we have to find how exactly the players are trying to continue the moves. And normally we know very well that week beginning they make a false move. Then the second day they just make the opposite move. Then third day is the midweek. They make either way stop-ins. Then Thursday and Friday they make their intentional moves. But intentional move is 2 sessions. They continue to rise or continue to drop and then reverse. And that is intentional move during that of the third session. So after an intentional move, they have to make an extended move, 2 hours of a opposite side move, then continue the intentional move. Between the intentional move and that of the extended move, they will have the stop-ins or a false move or a swing during the mid sessions. So this is how they try to make specific moves in the market. And these moves, if you try to identify, then it becomes easy for us to read their intentions. So to start with, we make a note of the initial lows and the highs around 3:30 GMT. So in the case of Euro, on Friday they closed it around 1.2778 and then made the quick drop below that of the psychological level 1.2750 and set the new low or the low for the day 1.2749. Then started gaining the level and gone above that of Friday close. Hit the stops around 1.2813. Then they have come to that level of 1.2785. So it is not that the market is bearish or bullish, and accordingly we have to take the trades in line with that of the trend. It is not like that. If you try to sell during the drop, then we'll be trapped and stopped out during that of the rise. They make it or an upward stop and then start making the slide. So if you avoid keeping the stop, then they have the extended move and thereby they can trap it. So ultimately, if you trade without a stop or with stop, they can still try to attract the margin call. The margin call, when you try to overtrade, then it's easy for them to bring in the margin call. Suppose you have got about 5,000 or 10,000 equity and try to take predominant of the equity, the positions like 5 lots and things like that. Then when they make a move against you of even 50 pips, the margin call can be applied, even though you don't keep a stop to limit the risk. So it is not that if we don't keep the stop, our risk is limited or there is not going to be any risk, but they can still make a very quick move and attract margin call. So these are all the 2 types of knives. They use it. So if you don't become the victim of the first knife, you can become the victim of the second knife if they throw. So obviously we have to defend ourselves. We need to have a shield, and that will be the hedging order. So use the hedging order of 30 pips below that of the market wherever you are entered, and try to move the stop to that of the entry and keep the stop at entry and remove the hedging order. That will be the only way by which you can eliminate the risk. So in the case of Euro and GBP, they are not breached the high or the low, but slowly after going up to that of 1.28, after making a quick upward stop, and they are just making the slide down and currently trading around 1.2783. I will just explain with the help of the live market code page after explaining the initial lows and the highs formed for today. GBP formed the low 1.5794, below that of the psychological level 1.58. Always they try to target the stops which are clustered around that of the psychological level, like 1.2750 below that or 1.58 below that. So they try to hit the stops. Then go to that level of 1.5838 and they are not breached the high as well and holding in the middle level. Then yen, that on Friday suddenly they made a drop and everybody was thinking that probably USD yen could go down further, and also euro yen could go below 100. So that is how, when they find plenty of traders have taken 101, 102, 103 levels, the buy positions in the case of euro yen, they made a very quick drop and created the fear. And during that of the mid-year session on Friday, they are not rising euro and GBP at all, but they are making the drop in the case of USD yen, just to give as much pressure as possible for those who are holding long without a stop to liquidate the long positions. And later on, they gained the levels. And now you find that USD yen from that of Friday close, it has gained as well. Now you find in the live market code page, all these three currencies are in positive net change. So what sort of sentiments is working in the market? Is it a bearish sentiment or a bullish sentiment? It is nothing but the stop runs. The players are focusing on the money, but we focus on the sentiments. There comes the difference, and we find the players' moves as surprise all the time. Then USD CHF 93.75 is the low. They are not breached it, and 94.22 is the high. That is also not breached. Then Canadian dollar 1.0185 is the low, 1.0231 is the high, that is also not breached. So here you find that when compared to that of the majors, the commodity pairs are making relatively a bigger spread between the low and the high. Similarly, in the case of Australian dollar, 98.03 is the low and 98.76 is the high. So you find the commodity pairs have started making the moves to start with, and later on we'll come across the majors making the moves. So let me just I'll give the link for the live market code page. Then I'll focus the camera over that of the live market code page. Now, euro is trading around 1.278385 now. 1.2813 is the high, 1.2749 is the low. 5 pips positive net change is seen. USD yen is showing about 18 pips positive net change. You can understand that the contrarian move, they're just opposite what they have done it on Friday. They just squeezed on the downside. Now they started gaining the levels on the upside. Then USD GBP is also showing a positive net change of 8 pips. Then CHF is showing 1 pip negative net change. They are not correspondingly making a drop in the case of USD CHF, and which is away from that of a low. Like the euro, it is in the middle level. Then in the case of commodity pair, you find Canadian dollar has made about 28 pips drop. Rest of the things have not made much of a move. And Australian dollar has just gained 3 pips from that of Friday close. They made a downward stop and then upward stop and come to that of the middle level just with 3 pips positive net change. So when euro GBP and USD yen show positive net change, we know that they are making contrarian move. And now euro yen, they are taking it to 101. And similarly GBP yen, they are taking it to 125 to 124 from 124. So they are showing positive net change. And when compared to euro and GBP, GBP is making about 8 pips positive net change. So euro GBP is almost flat. And they gained quickly levels by gaining quickly the case of euro holding GBP on Friday. Because GBP, they made the extended downward stop until 0.57. You know that GBP is the sentiment creator. When they just quickly dropped GBP, everyone thought that euro could go to 1.25. But they just quickly gained the levels in the case of euro, followed by that GBP as well as Australian dollar started gaining the levels from that of their lower levels. So this is how they create the market sentiment and act against it of the traders within a matter of few hours. So we need to understand what their idea is. Always keep in mind, in financial market, if anybody wants to make money by simply using money, they need to be cunning. Always keep it in mind. There is no other alternative by which money can multiply into money, because we don't have any money tree so that we can just allow that money to grow. Obviously, they have to use the cunning strategy. So what is that cunning strategy? They just make a drop as if it is going to fall and then simply reverse it. And we may call that the trend is up, trend is down, and things like that. But they only create such impressions to that of the traders, but they have a different agenda. They try to make the moves in the market differently. And only when they make the moves differently, people can get caught and they can make money. So by using their money power, they just simply push the market on the upside or on the downside. That is the reality. So it is not that euro becomes bullish and GBP become bearish and things like that. It is nothing but the pushing the market upward or pushing the market downward. They do it alternatively on a daily basis. So in that we talk so many things, and because of the economic conditions and things like that, and we get confused ourselves. We know very well second to second the economy does not change. Then in the case of Euro GBP, they came down below that of 0.80 last week, and then they gained the level, because after coming to 0.80, many would have thought that straight it will go to 0.78, but they have to make an upward stop and before making a drop. And in the case of Euro CHF, many would have become really frustrated when they are holding around 1.2010 and holding it for a prolonged period without much action. Hardly about 3 pips spread is being done, because slowly they are gaining the levels in the case of USD CHF, and Euro is correspondingly lost the levels. As a result, you find that they are holding around the same level. Now you could come across the contrarian move, Euro gaining and USD CHF gaining. But not this week. By month end, only they will try to make the moves on the upside. Then coming to that of the regional currency, because many are interested in INR, Indian rupee. It is currently trading around 54.69, and you know that a lot of interventions, expectations are there, and they're expected to slowly make the slide, and probably by next week we will be able to see USD INR coming to 50 area very quickly, because they normally make such moves in the market in order to induce the traders who have taken the positions to do the short covering. And because these are all the new highs, they are showing it. Always, you know that whenever they show the new high and hold it, is nothing but the stop and strategy and inducing the traders to liquidate because of the margin fear. Then later on, they will make that currency relatively stronger. So you find that the players use all the reserves or keep all the reserves in US dollar. They just pump into that other market and buy the currencies and just book profit. And again, they just allow the currency to fall, and we talk about the economic conditions of those countries to which the currencies belong to. Then later on we find those currencies started gaining again. And so the players are in US, and so obviously they have to make the play of this nature and act cunningly on a daily basis and on a weekly, monthly basis, and get the reward for their cunningness. And they will be very, very happy making money this way. And you know that in any religion or any country for that matter, people have got the strong faith that if the money is earned illegally, it will go in the same way. Let me go back to that of the PowerPoint presentation. So we have seen the initial lows and the highs. They have not breached the initial low and the high in any of those currencies. Coming to that of the forecast, the expected market moves for today. Swing and rise are the expected moves during that of the Japanese session. So they made a small dip in the case of Euro and GBP and started gaining the levels again. And a quick dip could be seen during the early European session. That could be the week beginning false move. So European session dip could be a big buy opportunity, and watch how they are doing it. They may breach the low, or they may simply come closer to low and then go up or to that of the middle level. You just watch it in first 30 minutes, 7:30 to 8 GMT, 7:30 the European session starts. Then around 8:10 GMT, you can just take a buy if they are not continuously dropping. And we know very well what sort of moves they are doing it, whether a swing up to that of the low or a false move up to that of the low or a stop and below that of the low. So we can just identify that and try to take the buy position. Still, in order to limit the risk, keep the hedging order of 30 pips. And once the position makes profit, keep stop at entry. Then they are expected to make a quick rise using some stories. Then swing and rise moves could be seen during that of the AF session. So they have done for 2 weeks nearly a lower level consolidation with a downward stop and finally they initiated the reversal. Thursday they made the whipsaw moves, as I explained, the extended moves that could lead to that of the trending move the subsequent days. So on Friday they just quickly made the gain, and now they are holding the gains on Monday. So big beginning false move may be seen during early European session, and afterwards they are expected to make the gaining moves in the case of Euro and GBP, and it may not be because of any positive news from Europe or positive news from Great Britain and things like that. It is because the traders have developed the market sentiment that any pullback we should sell. Then the players buy all those sells and take it to the higher level and start trapping the short sellers alternatively. So they create the market sentiment and act against it of the traders from time to time, intraday, weekly, monthly, and things like that. Just I have minimized the PowerPoint presentation and I'll keep the camera over there of the live market code page. I'll try to answer to the questions which are asked here. How about going short Kiwi or Australian dollar? See, this is what, after the drop, when they make a rise, immediately the name is given as a pullback and a correction. Then corrections are sell opportunities. And all over the world, people are talking like that. And why you are asking me? You can just find out what happens later on. You do it in a demo trading platform. 2-3 corrections, you get small profits. Or that sort of moves. And the final one, that trap, you may not be able to withstand. It is like a gambling den, In a gambling den, when you go to Las Vegas, and they will just give you profit. Even if you do not know the game, they will show you profit. Then you are tempted to bet more money. And later on, they take away all the money. Giving $10, they take about $100. So this is a similar condition. They induce you to do sell and buy trade. When you do buy and sell trade, you become really frustrated. And you feel that it is high time that I should turn to start doing sell and buy trade. Simply following this doctor, by that I am losing money. So let me do the sell and buy trade. So this is how you put the blame on somebody and try to go in for such trades and lose on the other way as well. So ultimately, emotion or your emotional status is the enemy for yourself. So understand, after such a big drop, they are just given the pullback and somebody has bought and gained the levels. If nobody is buying it, the levels will not be gained. Is he a fool? Just find out. In Pico, if we have to choose only one session to trade, which session would be? Okay, now there are 3 sessions, Japanese, European and US, and most of the time you will come across good activities during the European session. Japanese and the US sessions depends upon the volume, but normally what happens, even if the volume is not there during European session, they will try to make some volatile moves in the market in order to attract the traders. By US session, many of the traders would have either booked profit or they would have just cut loss. So gradually the volume diminishes. Then you find the market swings get reduced. So European session could be the ideal session. But if there is going to be a data release and things like that during late European session, sometimes you may not come across any big moves. So it all depends, but you can just understand if there is a data release around 12:30 GMT, which is a prime data like non-farm payroll or the employment change, etc. Then during such a release time, understand the false move and take a buy or a sell. I always look for such quick moves. And when they make a quick downward move, I buy it irrespective of the data. And then they make a quick rise, I keep stop at entry because they can make up and down moves alternatively. And otherwise, in just a matter of 5 minutes, you just book profit in that particular position because we are all aiming to earn about 40-50 pips profit or sometimes 75 to 100 pips. So when they show 40-50 pips quick profit opportunities, don't get afraid of the volatile moves. If you are able to read their intentions very clearly, they cannot drop Euro and GBP to zero. And how many times they are telling that the Greece will be out of Euro and things like that. It's not the first time. For so many years they have been telling it. And they continue to tell the stories of that nature. If not Greece, they will take some other country, Spain or Portugal or whatever it is. Then they will try to give all sorts of attributes. Because any country will come across certain uncertainty times. So there will be some disputes and there will be some financial crisis and mismanagement and things like that. That's part of the game. So in that, they simply highlight those things and make all the correct drop or make all the rise. And ultimately, they try to fool the traders every time giving some stories. And we believe the stories and we think that that is actual and try to dig more in-depth analysis of those stories. Then we are totally distracted by that. Then automatically we lose the money when you trust on those stories. Gentepu. My broker is not allowing hedging most of my trading in Euro. So could I use hedging with Euro Yen? Yes, if hedging is not permitted, if it is not a facility available, then you can use, suppose you have got a buy position in Euro, then try to choose a cross when Euro is the numerator, like Euro GBP, Euro CHF or Euro Yen and things like that. So wherever the Euro is a numerator, you try to take it. And also you have to give another important aspect. They should not make contrarian move. Suppose Euro is positive net change and USD Yen is positive net change. If you try to hedge using USD Yen, they will be rising both. Suppose you are short in Euro and trying to short USD Yen. Because USD Yen, if you sell, then you get USD. So because Yen is in the denominator. So as a hedging, we have to sell USD Yen if you are long in Euro. In such a scenario, what happens? They rise Euro and make you to lose. And they also rise USD Yen to lose. And by hedging, you will be incurring more loss. So in the case of Euro Yen and GBP Yen, what happens? They move in tandem. So if you use Euro GBP, it might be struck on one side and may not make any significant protection for you. On the other hand, certain days like on Friday, how they had done it, quickly gained the levels in the case of Euro holding GBP. Then you get struck. USD CHF, sometimes people use it for hedging, but you know that it is making 4 pips gain and 1 pip drop in the case of USD CHF. So it may not be an appropriate hedging tool. So the best way to use, in case if you are having long in Euro, then use Euro Yen or, not Euro Yen, Euro Australian dollar, wherever you come across similar pips formation. then try to use it. Euro yen. Euro yen may not be a very good thing because now they are gaining. When they are making contrarian move, we don't use such currencies. Always see that they are showing similar net change in the respective cross. Then try to use it. Suppose euro long and you wanted to take sell position in euro CHF, then it is only 1 pip, there is 4 pips. And now this pip ranges are very, very narrow, so it's very difficult to ascertain. But when they show 40 pips, then you will find variations. And now it's a mid-session, they are handling the process. So according to, from time to time, the hedging has to be modified. I mean, the currency you choose for hedging should be changed, depending upon the market condition. Then Desmond. How is Australian dollar direction this week? Australian dollar is expected to go up in this week and next week as well. That is based on my forecast. It can also go wrong. Then wrong. If you are calling, the players are making money illegally or without offering an equivalent service. What are we doing here? The same right. When we expect to make money freely with our little money, why not the big players? Yeah. So, you know that there are two ways of making money. One is doing a genuine work, get an employment or a business, and in a business you keep a nominal markup and try to earn. And in employment you do the service for somebody and he pays the salary. So always we convert our money into effort, and from that effort we make again money. This is a normal course of money making process, and this is a slow process. So to draw the money, you have to wait for 1 month or more, and or sometimes 15 days if the salary is given twice a month. And you know that when you want to simply hold the money in our hand and want that money to earn, hold the money in our hand and want that money to grow, then they go in for this sort of activities. And your argument is when we are trying to make money illegally, it is not illegal money making by entering to the market, because we wanted to make some quick money, making use of the market fluctuations. So normally a trader who is entering into the market doesn't think that he has to make illegally the money, and instead he has to make some quick money. Why he wants to make quick money? If you go to any place and ask the person who is having a handsome salary and things like that, or doing a very flourishing business, and he will not even look into the side of the market. And those who are in need of money and unexpected calamities have happened and they wanted to just compensate it by making quick money, and somebody has said that I made few $1,000s and things like that in a matter of 2-3 days, that attracts some traders and they enter into the market and finally see that they lose the money without understanding the market. So I am here mainly to say that the market is nothing but a manipulative conditions. So if you are entering into the market, be prepared for the risk and don't think that you can easily make money from the other market. So for that, what you need to understand, what is being projected to us, like the economic conditions of various countries. Because of that, the market is making volatile moves. Then you pray for US to go up, or the economic conditions of US to grow and UK to grow and things like that. But ultimately you find second to second the moves happening in the market. Then you are not able to really understand why such moves are happening in between. So suppose there is 8:30 GMT data and market reacts differently. 12:30 another data release, the market reacts differently. What happened to 8:30 data, which is a fundamental data, which is discount? So you are not able to understand all those things. And I am here only to say how exactly the market is being manipulated. It is up to you to make money or just get away from the market. then Jack. Is there any difference between Forex Pros and Saxo Bank live market web page? Both are equally same. Then Pico. Why gold start to gain fast? Yeah, that is what the players, they drop gold, and you know that every time they use different currencies or commodities as a safe haven. So initially, when US dollar was considered as a safe haven, even gold was dropping, and many people were telling in the forum and also in FX Street, I noticed, and other websites, that because US dollar is becoming stronger and stronger, it is a risk aversion, so people are also coming out of gold. Then the very next day, they started telling that gold is appreciating because an alternative safe haven has been found out, that is namely gold and silver. So they made all the drop and then started gaining the levels. When you jump and buy at higher levels, what happens? They'll make a quick drop. So it's something like a safe haven. They only don't want traders to buy near the low. Yes, they avoided traders to buy near the low, and they induce the traders to buy near the high. Then later on, they will just make a drop. You know that whenever gold and silver, they rise, they also rise Euro and GBP, and simply say that risk appetite. And they use the different story, risk aversion, and corrected Euro GBP as gold, but gold, they started gaining it, telling that it is a safe haven again. So not risk aversion or risk appetite, it is a safe haven strategy. Then now they will start rising Euro and GBP after a weak beginning pulse move. Then everybody will say that risk appetite has emerged into the market. And Tony, when you take profit on a hedge order and then place another hedge, do you trail the pending order? Yes, definitely, sir. And suppose you have taken a buy at 1.2785 and booked profit around 1.2820 or 15 and things like that. Fine. In case you have taken a buy and afterwards they made a drop to 1.2750 and then going up, then the hedging is making loss. You have to cut the loss making hedging. In case if they don't hedge and go up, then trail the hedging order until such time you are able to keep stop at entry. So that reduce the risk from 30 pips to 20 pips, 10 pips, 5 pips, and 0. Once they start going above that of your position, showing nearly about 20 pips profit. So that even if they hit your stop, you don't lose any money. We can re-enter again. If they don't go beyond that level, you re-enter again. And that way you can handle the hedging order. Not immediately. As they make the moves in the market, you have to move the hedging order. Wait first for the market to reverse 30 pips and then move the hedging to break even. Yes, you are right. Then Desmond, do you expect USD yen to rise from here? Yes, most likely USD yen is expected to quickly gain the levels from tomorrow. Today they will be doing a slow rise so that people might think that it is a pullback for USD yen to sell and also in yen crosses. Then later on they will just show their true color intentions. Then gold. On an average, how many pips do you make daily? See, I don't go by the pips. I look for an opportunity. Whenever there is a quick move, only then I trade. And in a trade, normally I earn about 50 to 75 pips profit. And if the going is good, then I make about 150 pips. And there are certain trades wherein I do the position trade using the hedging. And there again, I just wait calmly for them to make quick moves and then enter. Still, they can hedge me. So as I explained that, and there is no guarantee in the world that just because I have taken a buy position, they should not hedge me. They can hedge anybody for that matter. And because it's a collective decision of the players, so we are all small specks before them. So if in case if it is hedged, they watch and just keep some limit orders when I understand that they are just going against my expectations and try to book profit in the hedging and take another buy position after 150, 200 pips downward move, average both the buys and just exit above their base, above their average. So that is how I just calmly trade. That is why I'm able to give webinars and I'm able to chat with people. Still, I continue with my trading. Then decimal. Focus for the rest of the week, I'll give it. Gold. They will always manipulate the market as they need to buy or sell, and crooks are also in the market. This is a cunning way. I won't call it as a crook. It is a cunning way of making money in the market, dropping and rising alternatively. But we become fools, by trusting it. There comes the pathetic condition. Ahmed. Euro-USD is supposed to make a rise. After a dip during early European session, they are expected to make a rise. Is there any significance of opening price? Because statistically, it is considered as an important level, closing level, opening level. But I have seen invariably the players do not respect any of the statistical derivations. Whether the support or the resistance, that when euro was dropping from 1.30, everybody was telling that 1.2880 is going to be a strong support. Once it has breached, then they said that 1.3735. Then it has breached and 1.2650 or 45. Then they just came down and went up. So what is the use of simply telling that this is the support, this is the support, this is the support, and without constraint? Okay, we are given a support 1.2880. Somebody has bought there. What solution we are supposed to give it to them? Nobody thinks about it. That's all. That trade is gone, stopped out. So the players invariably see that they don't respect any of the statistical derivations. They pretend as if they pretend the market to present exactly very similar to that of statistics and then make their havocs. So to start with, you will find that statistical derivations might work very well. Pivot points or support and resistance, retracement, Fibonacci, all might appear working, and suddenly they will make one whipsaw move and hit all the stops. There ends the matter. Then share. How far GB will go? Is Olympic game affect the currency? There is no end. See, somebody sneezes, when king speaks, it affects very much. No, why you talk about Olympic and Pico? What connections have between spot and future market? They have to handle spot as well as future market. But in the futures market, simply they can say that it has discounted the spot market, or sometimes it is on premium. There again, they try to induce the traders to take wrong positions. Is it important to analyze the derivative market traders' positions like CFTC, commitment report? See, you can do such analysis, but there is no guarantee that market has to give appropriate moves depending upon your reports or the studies. And always keep in mind that any of our study can go wrong. That is the power of the players. Let me go back to that of the PowerPoint presentation. Okay. Now, initial lows and the highs, they are not breached in any of the currencies. So I am not going to that particular page. With regard to the expected market moves for this week. So today I said that swing and rise moves are expected during Japanese session, a quick dip during European session, and a quick rise may be seen during late European session. Swing and rise moves may be seen during that of the US session. And tomorrow they could make up an upward gap opening and then start making the slide during that of the Japanese session and start gaining the level significantly Tuesday 22nd. And Wednesday they could make a quick rise and holding high strategy might be seen. On Thursday, so they may not do either way stop ins on Wednesday. They could quickly gain the levels and hold higher levels on the day, and subdued moves might be seen during European and US session on Wednesday. Then Thursday, they are expected to make the either way stop, and this time on an upward move and a downward move during the late European session on Thursday, that is 24th. Then Friday, this time, you could come across a very significant rise in the market from the start of the Japanese session. They could make a rise, swing and rise, and a quick rise during the European and US sessions. And then little bit of profit booking towards close of US session could be seen on 23rd. Then the week after that is the last week of the month, wherein you come across this particular month gets over and the new month starts. And during such time, they are expected to bring in very volatile moves. Before such volatile moves, they are expected to aggressively gain the levels in this particular week. And hope this time they gain significantly levels so that when they drop during that of the last week, it may not go to new lows. So I take this opportunity to thank FX Street and all the people who have come here to listen to my webinar. And I'm happy if you are able to develop an awareness about the market. Nothing more than that. So I'll come back again on 24th of May and just review the calls what I have given and also review the market on that particular day and try to see how exactly they could make moves on the weekend as well. So see you on Thursday. Until then, bye.